Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Friday, April 1st. It is 6:45 as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures. Bitcoin down 1%. Equities are up about 0.5%. Oil has staged a $3 pre-market rally, was trading down as low as 97. That has rallied up to flat this morning. The rest of the commodity complex is down. Nat gas, copper, gold, all down about 1%. Gold is getting to the very frustrating level. It really can't really do anything here. Don't know why. On the macro front, we've got front and center, we've got the jobs report. That'll be an important data point for the FOMC as we move forward, depending on that and other factors. They're going to be putting that all in their blender to see when they want to do a rate hike and when that rate hike might possibly come. We've also got next Wednesday, we've got FOMC minutes that comes out. That may also shed some light on the Fed's thinking. Also, we've got Friday options expiration today. Make sure you go through all your holdings so you don't get any rude surprises tomorrow morning. Decide if you're just going to close any expiring options today or buy more time with them. Just don't let them expire in the money unless you want to be assigned the shares. Now, in the blog, I've got a lot of what I hope will be interesting and useful information for you. I've got a list of market keys that I'll be watching in April, and also a bunch of things that you can watch on your own as far as charting goes to kind of keep your finger on the pulse of the market. So please take a look at that. I've also got all the key option strike expirations for today, where the important strikes for SPY, QQQ, IWM, Dow Industrials, and SPX. So especially on options expiration day, I like to have those close at hand because they may make a difference as we move through the day and, see if we either fall below a put wall or break above a call wall. And really, given yesterday's crappy close, I think you got to be looking at the downside, not as a prediction, but we're a lot closer to those put wall option strike locations than we are on the high side. So take a look at the blog this morning. I think you'll find a lot of information quite useful. Got a ton of stuff to go over, so let's get into it. The oscillators are still at the upper end of the range, although we have come down from 65 down to 34. And what I want you to notice is that although there have been times in the past where the oscillators will hang out near the highs for a few days before they make the trip down, but it's not that often. And we've already spent a lot of time up here near the top. So my guiding premise as we head into April is that we're starting a down cycle on the oscillators. It's not a given. It's not a law. It just seems to be what happens once you get to the top. That rubber band is expanded and stretched, and then it releases. And I think we've started to see that over the last couple of days. This is the NIMO for the NYSE. If you were to go over to the NAMO for the NASDAQ, it would look almost exactly the same. So let's skip over that one this morning and for the sake of time. Here we are with SPY, down about 1.5% yesterday. And so your pivot today is pretty clear, is 450. If we lose 450, then these lower moving averages, the 20 comes in right about 445, and then we've got the 50 below that comes in, well, it's almost the same place. Both of them, no, beg your pardon, the 50 comes in at 442. If this is just the first leg of an upcycle, you'd expect these moving averages to hold so we'd come back up here, come back to, 440, 442, have these moving averages hold, get a little bit of a relaxation, and then accelerate higher. That's one scenario. The other scenario would be, start of a new downtrend, leg one down, B leg, kickback, bear market rally, and then third leg down. So that's what we've got to decipher in the next week or so of trading. Do we come down here and hold and then bounce up, or do these key moving averages break and then opening the door for a move back down towards these prior lows? On the 2-hour chart, you can just see the resolution a little bit better. Notice we've got the largest volume over price support bar on the chart right here. And so 450 is going to be an important level. And you can see that once you break below 445, then you come into a little bit of an air pocket until we get down to 435. So it's going to be important for these upper support areas to hold. Otherwise, it could roll downhill rather quickly. 30-minute chart just gives you a little fine-tuning on the more or less the micro levels on the way back down. Qs. Had the down day yesterday. You can see that the 61.8 retracement level was almost to the penny on the highs of this bounce back rally. It died, right in this range, right in that 371.50, 372 area. And now we've pulled back off of that. Notice the large volume over price bar here. So I think for the Qs, I think 360 is going to be an important pivot, because you've got the 200 right below coming in at 357, and then you've got the 50 and the 20 coming up shortly afterwards. And so just remember those central technical analysis tenets, in that when price is above all the moving averages, things remain relatively bullish. But once you fall below, then things turn bearish. So that in and of itself, with these moving averages more or less, all clustered within a $10 range, that's going to be really important. If price comes down and say the 200 or the 50 contain any downside pressure, then that'll be a net positive. If they break, then you can see what happened over here. Once price got below all the moving averages, then things fell apart rather quickly once below those moving averages. So watch that in your charts. Here, you see this pivot here around 364. We're a little bit below it now. We'll be above it probably when we open, given we're up, 0.5, 0.6%. So early today in the morning session, if you're an active trader, remember our trading keys. You open above a well-defined level. That'll leave a gap below. Then if you move into that gap, that's a sell signal. Then if we were to break the low of yesterday's close at 362.54, then the door is open for a move down towards 358. So watch that opening gap carefully, and then watch yesterday's low very carefully, because what could happen is, we open higher, they run down real quick to fill that opening gap, but the bottom of the gap holds at yesterday's close, and then it bounces higher. So there'll be a decision point here at the bottom of the gap if they decide to go down and fill it, whether we head down further or that was just a technical gap fill and then we bounce higher. And you'll be able to see that real well on lower time frames. I wanted to show you this 30-minute chart because, technically now we're on a sell signal. Why? Because, we broke below the trend line. That's your first hint at a sell signal. And we lost this 364 pivot point from yesterday. So until price can break back above 364 and hold it, then, we'll remain on a sell signal on the 30-minute chart. And you can also see up here, RSI has broken low to the bearish regime, and PPO as well, momentum, has broken below the zero line, both in their bearish regimes with price below trend and below support. So you got the quadruple whammy there. So the key this morning is breaking back above 364 and holding it. IWM dropped down yesterday, back in towards this $20 wide trading range. Let's look at it at a lower time frame. I think it shows it better. Yeah, you've got a pivot here at 206. We're below it. You've got the 50 EMA coming in on the daily chart, right in this 204.50 area. So those same kind of rules that I just laid out for the Qs would definitely also apply here. And what I would say on this chart is this, to me, looks like a bear trap. Why? Because we had this big trading range. We knew that 210 was a resistance area that went back over a year. And so we break out of this big trading range. We go back in to the year-long trading range. We should not be back down here. All these people whoever they may be, now realize that they were wrong. And so we got the follow-up selling. To me, if you got a kickback to 208 that either stalled or failed, you could be short against that level, which is the top of this trading range. And if you get stopped out, I would have the same approach at 210 as I did at 208. I'd be willing to give it another try back here at 210. And, my feeling there is if things are going to get bearish, the bears would step in at 208 or 210. And if they don't, if price breaks back up into 211, 212, remember the top of the old trading range is 230. So if I got stopped out here at 208 and then I got stopped out here at 210 and everything looks bullish and all the problems are over and the rate hikes don't mean anything, we're taking off, then getting stopped out at 210 and 208 is nothing if the top of the next trading range is $30 or $20, $25 higher. That's fine. We'll get long and we'll go to the top of the range. But this to me looks a little suspect. So I would be thinking along those lines. And here on the 30-minute chart, you see the same thing, and the same comments would apply that I showed you or discussed on the QQQ 30-minute chart. You've lost a trend line. You lost 206 support. RSI lost the 50 level, and now it's in bear mode, and PPO is bearish as well. So to me, this looks like the start of a breakdown, and there may be a kickback rally up here, but my thought process is that even if there is a kickback into this trend line into 208 or 210, that it would fail at that point. But for today, I think 206 is your clear pivot. As we move into Fatman, as I always do, I want to welcome any new guests to the YouTube channel. Really appreciate you spending some time with me pre-market. I do my best to give you objective trading levels. And if you stick with me, I think you'll find that you can use these levels with confidence and then focus all your effort on execution, because that's, in the end, where you'll get paid, how well you execute your trades around these particular levels. So if that sounds appealing to you, please hit the subscribe button and the like button as well. And then jump over in the show notes, find the link to the blog site where you can drop in your email address and register for all my content. That way, over the weekend, morning, noon, or night, whenever I send something out, whether it's a trade idea, market observation, whatever, you'll get it right in your email box. It'll be very convenient, and you'll also get an invite to our trading room, and we'd be glad to have you there. And of course, longtime subscribers, thank you so much. I hope your first quarter went well, and let's keep our nose to the grindstone and start off the second quarter well and stay ahead of this market. So Facebook dropped out of the rising channel, back at 222. I think that's your pivot for today. I think you've got some room down here to this large volume over price bar. I think things could come down in here to the 216 area, and then I think that would be there's never a last chance. So I hate saying things like that because the market can reverse at any time and it doesn't need a reason to do that. But after this rally, just looking at it visually, you drop below 216 and drop below this value area, then I think you're definitely going to come to lower levels, and then there'll be a support level down towards 208 and then down towards 204. But I mean, if you get down to that point, you're almost back to where you started. So we'll have to see over the next few days. Keep an eye on your indicators, watch your support levels, and let's see how those hold. A lot of these charts are going to look the same way. Very strong rally in Apple. Actually got pretty darn close to the all-time highs, which were up at 182.50. But now we've broken the channel. We're coming down. And if you look back in time on your charts, you'll see how well these support zones acted both on the way down and on the way up. You can see, hesitation here, support here, hesitation, breakout, come back to test support, breakout. So now on the way back down today, or in today's action, I would simply use 175 as your pivot point with a downside target, first target of 73 and an upside target of 77. So I think you've got a $2 move in either direction that you can shoot for off of this 175 pivot. Tesla, I think it's been pretty obvious over the last few days that 1100 is clearly your pivot. I think it would be huge if price were to pop it, because then your upside target is 1200, $100 higher. That comes off of the prior trading range on the daily chart. But while it stays below, that leaves this gap vulnerable, and I've got the levels marked there for you. If this thing rolls over, then your first test is going to come at 1053.60, and if that fails, the gap is about $40 wide, and then you're back down to 1010 and probably actually down to 1,000. And you can see, and this is what is so visually helpful in having these volume over price bars present, is that you got a resistance level here, and you got a support level here, and you got a big void in between. So if this thing rolls over, that might be, given it's Lottery Friday, if you're into lottery tickets, this might be a good one from the sense that, if you guess right, or your technical skill is sharp enough, and you can get a short position with this big void in place, if the thing rolls downhill, you might get an outsized move on a Friday afternoon heading into the weekend. And here's where I would tell you would be a pretty nice setup. Say the market opens up and Tesla follows, and it comes like right up to 1100, where it has not been able to get through in 3 days or 4 days. You can take your shot against 1100, and then you can get an out of the money put and see if it doesn't roll over. And, if it doesn't, it's a lottery ticket that ends up on the floor. But if it does, you could have a big winner, especially if they roll it over in the afternoon and it hits that air pocket and people get a little skittish on it. So, anyways, that's all thinking ahead. You've definitely got the levels here at 1100 and the gap below. Microsoft, kind of no man's land here at 308. If you're good in those opening sequence types of trades, by all means, you might get a kickback rally up to 311, or it may just come right down to 305. Those are your main pivot levels, 311 and 305. And for me, if I could make this 305 like 5 times thicker on the line just to show you the importance, I would do that. If we go over to the daily chart, this 305 has been the line for months and months and months and months and months. So if you're a swing trader or a position type trader, you can let it thrash around here and do whatever it wants to do. Or if you got long on the breakout and you're still in it, and you can take another $1 or $2, back to your entry whenever you got it, you can stay long, but anything below 305, anybody up here, should stop yourself out, because to me, 305 on Microsoft is the go, no-go line. And if you were so inclined and you wanted to take a swing short on Microsoft, I would do it one of 2 places. I would either do it on a break of 305 or on a break of the 200 that comes right in here at 294. And so I think you want to shoot against a well-defined level, and technically it's 305. But also notice you've got a large volume over price bar here at 294 that would work equally well as an important line to shoot against. So keep those levels in mind if you're interested in a longer term type swing short on Microsoft. Amazon, uptrend, lost this support level yesterday afternoon, down in no man's land. I think the key level is the 200 here at 32.33. Remember, in days past, we had marked the 200 at 32.27. It moved up a little bit with this up move. So now your 200 lies at 32.33. I think, you've got a level right here, and then you've got a level at 3200 that I think will be important. You can see touches here, prior low here. You come back down to 3200. Bulls would certainly want to hold the line there, and what may end up happening is, looks like you've got, if we came down to 3200, you'd have 2/3 of a head and shoulders, maybe get another bounce up and come back down, and then test that 3200 again. But at any rate, that's going to be a really, really important level for Amazon. Google, right back down to this key level, 2780. That's your pivot for today. Notice the void in the charts. I think if it breaks 2780 almost instantaneously, I think you'd get down to 2750, and then that would need to hold, or you're going to be right back down to the top of this trading range at about 2710. Netflix, 375 is your pivot, and with your first target about 370. Kickback rallies could go up to 380, 381, or back up towards 387.50. It's been a weak stock. If you really want to look at it, we had a leg down, and then the big rally, all it really did was come and back test the breakdown. You can see it was at the same level. Actually, we could even put it right here. You got a double top across the, across these highs, and now it's down below trend. So I really think it's probably headed lower from here. Semiconductors, right back down to that key pivot at 270. Notice the cluster of all the EMAs. I mean, they're all within really $5 of one another. If this thing is going to hold, it's going to hold right in here. You've got the rising 20, you've got the 200, and you've got the 50 all coming in at 270. And so if that holds, of course, everything is fine. We rocket higher. But if it doesn't, you're going to have price below all the moving averages again. And you can see how quickly this fell apart. It went from 270 to 240 in maybe a week and a half. And so that happened really, really fast. Not saying it's going to happen fast this time. All I'm saying is that this EMA cluster really, really needs to hold for the semiconductor group. Now what I want to do is move quickly through a bunch of charts that you can keep an eye on to kind of keep the pulse. And anyhow, we've been talking about retail. A couple bad days at the office. We had a 4% down day on Wednesday. We had another 3% down yesterday. We've got this little support line here. But to me, this looks like a bear flag right here, and really didn't, considering what it's coming out of, very weak bounce. All it did was come and back test this level here at 82, and now just, fell apart after that. And as we've been discussing, now price is below all of the moving averages. Housing, same deal, even a worse. I've got a short on these. Broke the prior low. That's never a good thing. That's always a sell signal. Whether it's because of rising mortgage rates or whatever the reason, looks like traders want to get out of housing. So I think this is going to be a good one to watch, not only for trading purposes, but also from an economic perspective. Housing is a big part of the economy, and if all the housing stocks are rolling over, it's either because of a reason or a perceived reason by traders that they don't see a good, future near term for housing. This won't come as any surprise to you, but I think if this market falls apart, and that's an if, I think they're going to go, traders do what's worked before. If the market falls apart, are they going to go for unprofitable Ponzi bubble stocks, or are they going to go after Apple? Are they going to go after Microsoft? Are they going to go after Google? Are they going to go after Amazon? I think they take the path of least resistance. I think if you start seeing weakness in the broad market averages, I think if you flip over to ARK, it's going to be worse. I think traders are going to view this kickback rally as free money. They already know where the low is. I think if the market rolls over, say for instance, Jay Powell comes out in 2 weeks. Guess what? We decided to go early, 50 bips. And then with a May meeting in 3 or 4 weeks after that, another 50 bips. I think they'll go after this ARK stuff like nobody's business. And I think tech in general will have trouble. But I think all this unprofitable stuff with real high PEs is going to fare worse. So you know that I've got a number of shorts on in the ARK complex, mainly at this point as a hedge against my longs, and I'm glad I had them yesterday. I wasn't so glad I had them on Wednesday, but yesterday I was glad I had them. They all performed minus 4%. So here's your pivot points. I think if price loses 28.5 on ARKF, then that's going to start the ball rolling downhill. ARKG just lost the trend line yesterday. I think the next big decision point for the genomics sector is going to be this large volume over price bar at 45, and then you'll have another one down towards 44 area here where you've got a series of lows and the bottom side of this large bar here. I should have put that in there. So anyways, those are the key areas for that. We know that flagship fund has a lot of Tesla in it. Tesla's been on a magical run since those lows. I don't know how many, what the percentage, but big rally in Tesla. So you saw a really good rally in the ARK flagship fund, but now lost the trend line, coming down to a key area here at 65. You see the put butterfly that I put on the other day. If this thing stays above 65, obviously these are going to be worthless at April expiration. But if it breaks 65, you've got a big void in the charts here, and then you've got another support zone coming in between 60 and 58, and so that's where that butterfly is really going to pay. So time will tell. You probably have to get some help from Tesla for that to happen, so that'll remain to be seen. And let's wrap up with the ARKW down 4%. My position. I've got something, I think, out in May on this. Void coming up in the charts, and then a big support area down towards 82.50. That will be an important point to hold. Even if this thing rolls over there, I would call that a huge win for ARK if it can either hold at this 86 level or even at 82.50. I think the ARK complex people would breathe a sigh of relief if 82.5 ended up holding, and then we rock it up and take out these highs and carve out higher ground. So it remains to be seen, what happens in April. So let's wrap it up there. Quick review. Jobs numbers at 8:30. Options expiration today. Check your portfolio. Make sure nothing slips through the cracks. And please visit the blog site this morning. I think you'll find a lot of useful information there. So let's wrap it up for today. Hope you had a good first quarter. And let's start the second quarter off on the right foot and go after some green in the second quarter and keep the ball rolling in the right direction. Thanks for your time this morning. Hope you have a nice weekend. And this has been Chris Buss with Traders Profit Compass. Talk to you next time.